In Lesson 4, we move from property research into financial analysis. This is where research becomes a real investment decision. By this point, we are no longer just looking at properties. We are underwriting deals with discipline. The purpose of this lesson is to introduce the Tax Deed Collective investment spreadsheet to help organize your research. In tax deed investing, numbers matter. A property may look good online, but the numbers must support the decision. Instead of notes in different files, the spreadsheet creates one organized system for property data and cost estimates. One of the first sections is property details, confirming the parcel number, square footage, and year built to ensure accuracy. Next is value analysis, where we estimate the after repair value, or ARV. This drives the entire investment decision. ARV should never be guessed. It must be supported by comparable sales, market data, and online valuation tools. After ARV, we analyze costs, opening bids, estimated rehab, contingency, and post-sale holding costs. We introduce rehab tiers. Tier 1 covers light repairs, while Tier 2 includes major systems like electrical and HVAC. As the rehab tier increases, the risk increases. Your maximum bid should become more conservative to match. Don't forget seller closing costs. A good rule of thumb is to estimate these at approximately 10% of the ARV. Excel is most valuable for scenario analysis. What happens if the hold period is longer or ARV is lower than expected? The final result is the maximum bid, the highest price you'll pay based on data, not emotion or competition. Financial analysis creates discipline. You are turning research into numbers and numbers into a winning strategy.